Good evening, good evening, good evening. Welcome, welcome. Sorry, my laptop is having a rough day at the office by the looks of it. Everything's going a little bit slower than usual, but we're here, we made it. Thank you so much for joining us. Welcome, welcome. I know we've had a few new people join this week, so welcome. If it's your first Tuesday night with us, so honored to have you. Massive welcome. And I know we might have also the odd guest with us joining us this evening. So welcome. And if you're watching the recording, hope you're doing amazing wherever, whenever you are watching this. I know that with our international family, we're all over the place. Some are sleeping right now. And yeah, just great to have you. I know, yeah, Jacques on the other side of the planet, you're just woken up and we're just, getting to bed soon. So anyway, here we are. So first off, guys, apologies from Mike. He's got some stuff going on this evening, so he won't be joining us, but I have got plenty to share with you. I know we've had plenty of questions and things in the chat around some pretty simple, not simple, I guess, some pretty basic beginner stuff inside of TradingView. So we'll get to some of that stuff in a little bit. But yeah, to launch us off, guys, I thought, I shared a word on Sunday that was really burning in me around finances and just prepping our mindset for abundance. And obviously, most of us have signed up for this because we don't like the current state of our finances. We're looking to change things up. And so with that comes learning a skill set, but really a lot of the professionals that we're tapped into have all said, learning to trade is like learning to drive. And it's 5% strategy, maybe 10, and 90, maybe 95% mindset. And so with that, I guarantee that if you were to start, how to describe this, diarizing the time spent on learning the strategy versus learning the mindset, we probably have that 5 and 90 the wrong way around. And so with that, there's so many books and speakers and things that I could recommend. I want to share just a few nuggets that I shared on Sunday. Hopefully, it looks like I'm freezing on Zoom. So hopefully you can still hear me and see me. I just realized everything froze. Drop a 1 in the chat if you can hear me, see me okay, if the sound's all right. Full house. So cool to see you all here. I know it looks like I'm looking like over there, but that's just the joys of this widescreen monitor right now. So cool. Thank you for the ones. 0.5, Wayne. I'm going to take that as you can maybe hear me, maybe see me. But yeah. Okay, cool. A little laggy. Let me just see if I can shut down anything that's running in the background that might just free us up a little bit of memory. Let me close that down. Sheesh. Okay, definitely feeling the need for a new laptop right now. So let's shut that down. That's the problem. Get a fancy screen and it rocks when I'm not trying to live stream and run lights and cameras and all sorts at the same time. So, okay, a few things shut down. Hopefully that gives us a little bit of a buffer for now. But I am watching the charts in the background, guys. I know London opened a little while ago, so we'll get to that. But in the meantime, I'm going to share, let me see, I haven't even done this before. I don't have a full-blown PowerPoint from Sunday. I just exported my slides into a PDF. So I'm going to screen share that and just share with you a few little things. Sorry, guys. There we go. Okay, we're back. I'll merge the two if I have to, but we're back. Okay, screen share. What is going on tonight? Let me see. I want to do this and this. Yeah, obviously got way too much happening on this thing right now. Sorry guys, it's like I'm pushing the buttons. Thanks, Gracie, I appreciate that. I'm like waiting. I'm pushing a button and waiting for something to happen. So spinning wheel is not. I don't want to see the beach ball right now. There we go. Okay, let's go for. I can now see something. Here we go. PDF. Gotcha. All right. I feel like my laptop is perfectly personifying what I want to share with you this evening. So check the button to share. Let's see. Something's happening. Slowly catching up. Drop a 1 in the, wait, there we go. Okay, there we go. Now you look, I know that you can see what I can see. So guys, Sunday, I shared this word about double-minded madness, which is essentially around the idea of we've got our conscious mind and our subconscious mind. And what we're busy training and learning right now in a trading sense is we're actually trying to train our subconscious mind at a level to believe everything that we are learning and start to see things at a subconscious level. So that eventually trading and certain patterns and certain signals actually become subconscious. And obviously I didn't share part of this on Sunday, but to give you context, there's a verse there in James we'll get to. But I'm not going to spend too long on some of the stuff I did on Sunday, but I'm just going to ram through to, part of this here, guys, for those of you that do share the same faith as us in that, the context of understanding God's original intent for you plays a massive role in terms of what you believe is okay to step into in life. And when you understand that in Genesis 1 is the original framework where God created us in his likeness, in his image, and gave us this mandate to actually expand the Garden of Eden, to actually go out and extend the borders of, so to speak, what was given to man initially. And there's this big idea around, God extending his kingdom from heaven to earth and choosing to do that with us. And so there's always been this original plan to expand and take up more space and create and build with him. And so when you look at what's been restored for us on this side of what Jesus has done, which we're going to celebrate this weekend, stepping into Easter, it's pretty massive in a sense of recognizing what was lost in the fall and the fullness of what he really wants us to step into right now. And so with that, I've got some verses there about John 10 verse 10. I've shared that a lot. The enemy comes to steal, kill, and destroy. And so if any of that's happened in your life or happening, that is the enemy's plan. But on the flip side of that, it says, but I've come to give you life and life more abundantly. And when you start to believe and really expect and dream about that abundance practically, and you start to get your subconscious to come into alignment and agreement with that, that's when you start to step into that stuff. So I'll keep moving through. Let me just drag this aside so we still see what's going on the chart behind it. But here's a little bit about change, guys. So there's a real genius guy who talks about this in way more detail called Graham Cook. And so inside this change process that we all go through, we've got number one, first step in the box here, you've got revelation. So what does this look like? Revelation might be a vision, a dream, an idea of a better future that you're aiming for. And with that revelation, it's like here comes something brand new. I love the analogy of a pregnancy test for this, because I've got plenty of funny stories I'm not going to get into now of how my wife decided to tell me we were expecting a child each time around. But it got to the point where she just pretty much gave me something quietly in an envelope, walked away, and I was like, what is this? And I couldn't see, and I put my glasses on and went, hey, wait, what? Right before putting the kids to bed. Another one was quite funny. She just texted me a picture of it during the day and said, we'll talk about this later, but I'm about to go to a giant pastors meeting. Anyway, I digress. But when given said pregnancy test, or when you find out something, or you're given a revelation of, say, trading, and you see the compound plan for the first time, you then begin to see okay, life is moving in this direction right now. Life is changing. You get a revelation. Step two, confrontation. Things start to change. And so at this point, it's for us, if you're having a baby, it's okay, you're painting a room, you're buying a crib, you're learning about pregnancy, you're learning about parenting, or in the midst of trading, you're starting to learn, and there's confrontation happening. You're now adjusting your schedule to now get up early, or to learn this and do that. So now things are butting in, you're adjusting your life. Step three, transformation. You're starting to get this thing. Things are starting to click. You're starting to actually be able to apply some skills, play some trades on demo, and you can see the growth that you've experienced so far. And step four, manifestation, full-blown, promise fulfilled. If that was the pregnancy analogy, you're now holding a baby. It's gone from an idea to something practical and real. And at this point, I would say you're a profitable trader. And so this is the journey that we're all on. Some of us are on number one, if you joined this week. Some of us are on number two, some are on number three, and some are on number four. Massive shout out to Mario. I haven't kept up with how many names are on here. I know you're probably spending time with family right now, but guys, for those of you who don't know, Mario's been in this space for, I want to say, a little over 2 years. I'd love for him to share a story with you, but he finished working as a builder last week. And as of now, he is going full-time with trading. And so it's so fun to be a part of someone's journey that's gone the whole way through. And he now backs himself to doing this full-time, a couple of hours a day. And so I'll get him to share his story more in the future soon. But we've got everyone in our team here, in this chat, in this family, is on a 1, 2, 3, or 4. And so just be okay, give yourself space and grace for where you're at on the spectrum right now, and just know that you're heading in the right direction. You're surrounded by people that know how to get there. So moving on down, what blocks our progress, guys? So this is the thing. This is the verse that really highlights the entire thing about this double-minded madness. And so I'll read these verses from James. So it says, if any of you lacks wisdom, you should ask God, who gives generously to all without finding fault, and it will be given to you. So then it goes on to say, but when you ask, you must believe and not doubt, because the one who doubts is like a wave of the sea, blown and tossed by the wind. Verse 7, that person should not expect to receive anything from the Lord. Such a person is double-minded and unstable in all that he does. So here's this idea on, you're asking for something, you're on this journey, you want to learn how to trade, you want to learn these skills, you're to some degree crying out God, give me the wisdom to learn this thing. I want to get on the fast track. And subconscious, so you're asking for one thing with your conscious mind, but subconsciously, if you've got some beliefs that are, how do I describe this, self-sabotaging, in the sense of you may at a subconscious level believe that you're not worthy of abundance, you're not worthy of a 7-figure trading account, etc., fill in the blank. If there's a misalignment between what you are asking for in your conscious mind and what you're believing under the hood, so to speak, that ain't going to happen. And so that's why when we talk about mindset, we're talking about the conscious and the subconscious mind, really reprogramming ourselves. We've been programmed since the day we were born. We've come in with all the hardware, and since then, we've been learning and absorbing like a sponge and taking things in. And whatever our journey has been, all of our journeys look different, but we've been fed a whole lot of things that we've picked up and believed at a subconscious level that determine what our beliefs are. And so this idea of asking for wisdom and believing for this to learn these skills and to step into the abundance that it brings requires us going on this internal growth journey. So going on from there, I'm not going to spend too much longer on any of this, guys, but just to give you some more context of what this looks like, when I was in reading, for those who don't know our story, my wife and I, we got married 2012, sold everything, went over to California, did 3 years of ministry school, and I locked in with one of these teachers he's a very, very high level personal coach who understands the subconscious mind at a very high level. And he talks about here how our actions are up here happening, and they're fueled by our decisions, which are happening from our thoughts and our feelings in the moment. So this is moment to moment. Beneath there, you've got this realm of identity. This is where your mindset is living. This is where you've got your beliefs, your wounds, your memories, your vows. This is what you believe about God, or what you think God thinks about you. This is what you think other people think about you. This is if I spoke in front of a crowd when I was 9 years old and everyone laughed, subconsciously I might forge this belief that, well, speaking in public is scary. I never want to do that again. And for the rest of my life, I might avoid speaking in crowds, whereas I don't even know why, I just do it. So that's what this identity realm of beliefs looks like. So this is what we're kind of going after this evening, guys, is understanding, like, we've all got these subconscious beliefs. And if there's anything around there that is not in alignment with abundance, it's not going to show up. And down the bottom here, you've got this realm of desire, which takes it a whole lot deeper. Not going to spend long there, but long story short, these 16 core desires reside at the bottom of our hearts, and God's designed us to get these needs and these desires met in relationship with Him, and also in the people around us. But not going to spend time there, but when you understand how to get these needs met in the right way, everything changes. So from there, moving on down, understanding identity, like I said again, like, this is what you believe about yourself is huge. And I heard Bob Proctor actually say this, what someone else thinks about you is none of your business. Or what someone else thinks about me is absolutely none of my business. And when you can come to that place of being personally secure in who you are, who God's made you to be, everything else will everything changes when you're at that point of security. And you realize, you're not trying to be something for someone else, but when you're completely free and feel great in your own skin, that's when life becomes a lot of fun. So guys, coming back down a little bit, almost at the end of this idea of, this is what we're talking about really, is changing the way that we think. I'll read these verses from Romans 12 from the Passion Translation. It says, "For this becomes your genuine expression of worship. Stop imitating the ideals and opinions of the culture around you, but be inwardly transformed by the Holy Spirit through a total reformation of how you think. This will empower you to discern God's will as you live a beautiful life, satisfying and perfect in His eyes." Basically, guys, the way to change your life is to change the way you think. And so recognizing the fact that we've got a conscious and a subconscious mind, practically going after that, there's a lot of practicals that you can learn as to how to take captive those beliefs and really recognize what's going on under there. And you'll bump into this. I've heard people further down the track than me talk about trading when the reason they struggle to let trades run to the predetermined profit spot they know it should is because they're not used to seeing a trade running with such a high amount of profit so soon. To quote one guy in a messenger chat, he said, "I'm looking at my previous week's wages in one trade, and I'm closing my trades early. I don't have the boldness to hold it, even though I know, etc., etc." So when you get into the zone of really learning this thing, it's all about mindset. And so really learning how to take stock of what you do believe about yourself and what you're worthy of and what God's called you to, and really having that big picture vision. I love what Greg Reno says. He said we're designed to be rivers and not reservoirs. And when you've got a big enough vision that involves generosity and really sowing out and creating impact and serving others, that's where real fulfillment comes from. Not from trying to hoard a whole lot of cash or whatever, like actually having a vision to bless others around you. That's where true fulfillment in life happens. So the bigger that vision, the bigger the provision shows up, I believe. So yeah, guys, so from there, clarifying your future, this is pretty simple for all of us. We're looking at this thing going, like, in a trading context, what am I aiming for? What am I actually trying to get out of all of this? And for a lot of us, that might be the compound plan, like having a look at compound interest and thinking, okay, this is where I want to be 3 months, 6 months, a year, 2 years from now. And that's real. And that takes, getting really intentional and measuring, like, okay, this is the life I'm aiming for. I'm aiming to one day, maybe a year, 2 years from now, 3 years from now, be able to quit my job like Mario, be able to spend 2 hours a morning doing this. Maybe it's the London Open, the New York Open, and really design your life around, I want to be able to do this for 2 hours a day so that then I can go and do this, whatever that this is. But getting really clear on what that is and let that become a burning desire and a vision inside your mind that's not just a random thought that's unclarified. It's something that you've written down, you've spoken about with your spouse or your best friend, and you've dreamt about it in so much detail that that's the vision that gives pain a purpose if you're not enjoying your day job. So yeah, from there, guys, that's it. And you've already taken massive action because you're here tonight, you've signed up, you're on this journey, you're learning the thing. And all that being said, I'm watching a chart explode right now. I just realized I'm looking at like a 15-minute. Now I've just clicked on a 1 minute and price has gone up. So look at that. Let me unshare this for now. If I click that, are we back? Let's see. So I'm just catching up with the chat right now. Thank you. All right. Well, from there, guys, hope you guys got something out of that, but just really starting to embrace the idea of you've got all that it takes to succeed in this space. It's just learning to manage your time and your thought life accordingly. It's really, and if you want a book that has probably done some of the biggest wonders for mindset in my mindset in the last 6 months, dive into Bob Proctor's book called Change Your Paradigm, Change Your Life. I cannot state it enough about how that man talks about the way that you manage your thoughts and your beliefs and your emotions. It really will get you in a good way. I'm on the 3rd or 4th round of listening to it again, so I've got on Audible. It's outstanding. So right, Wayne has got his 35 pips on that. There we go. Stoked, man. I do not. So I know I'm stoked to hear that some of you guys are grabbing that. Let me do this. I'm going to screen share. I'm going to transition tonight, guys, and get into showing you. I've just loaded a brand new chart with the Dow to give you guys. Wow, my computer's stressing. Let me do this. There we go. Got rid of that. I'm going to screen share again. Gracella got my 30. Bam, guys, look at that. I love it. You guys are all just making money in the background while I'm talking about it. That's brilliant. Okay, let me share this screen. I want to do Chrome on that one. There we go. Okay, cool. Let's see if that's working. Guys, drop another one in the chat if you can see, hopefully, TradingView right there. I'm going to make this nice and wide. And hopefully it looks good on your end. Cool. One. Thank you, Elaine. Great stuff. So here we go. So this is, Killshot, and I'm just seeing. Cool. There we go. Lisa, 30. There we go. Wait. Got 30 going down and 32 going up. Just riding the waves both ways. I love it. Okay, so guys, when we load Killshot for the first time, TradingView, if you're absolutely brand new to TradingView, hopefully by now you've seen a little bit of instruction on it. But I want to go over just a few little things that I found really helpful in the midst of. I know we get a few questions in the chat around this, but some of us, look, come at this with a fresh set of eyes tonight. If you've heard it before, you've heard it before, but realize that we've all got little tricks and tips. So I believe there'll be something here for everyone. So starting at the top right up here, guys, this little button up here, watch list. This is where you can come and decide to add whatever it is you want to keep your eyes on, whatever charts. It comes pre-done with a few things like Apple and Tesla and whatever. So I've got the DXY, which is the US dollar versus pretty much everything. A few different NAS 100s there. The US 100, that's the one I would trade on. The US 30 is the one I normally trade on. I just created a fresh one here. VIX is a volatility index. Won't get into that tonight. US 30, that's a black bull one I just loaded for this evening. Some Forex pairs, and then I've got a whole lot of crypto that I keep an eye on that I haven't really been watching too much lately. But that's how you create a watch list, guys. That's how you can jump between different charts. So I've already got that loaded. So I'm gonna get rid of that. We've got this here. Right now, if you're loading Killshot for the first time, you'd be going, let me get this straight. Normally, there's a notification bell in here. If there's nothing in there, you may have it up in here in indicators. If you click that, it's going to load for you and you're going to see a whole bunch of different things. If you've got some, cool. If not, you're going to see invite only scripts. So if that's there, if you've already been sent it by Jay, Killshot will be in here. You can click that, add it to your chart, and it'll be sitting up here like this. So Killshot, you can come in and hide this, which makes it a bit easier on if you want more screen real estate. And then you can put the eyeball over it, hide it, and bring it back. So that's a chart with nothing, and then there's Killshot on top of it. And then I've got one, this is a bit of a POC hack. It's an indicator there that you could go and search for that if you want and some degree, that then pulls up an automated POC for me. So it might be a little bit different in how Jay draws it, but anyway, looking for the hacks. Next up, something that a lot of our dynamic edge guys will know is pivots. Shout out to Dad for finding this one. This is a really good one. I'm not going to focus on this too much tonight, guys, but it's just support and resistance. Something cool that I've utilized. I mean, look at that. Where did price come down to earlier? Bang onto S1, and then up it goes. So anyway, I'll get that out the way. Sorry, I'll turn that off. Don't want to overcomplicate things for you guys tonight. Just want to show you a few things. So right now, guys, if I'm looking at this, I'm a little crazy. I love to know what the heck is going on. Big picture. So I don't do this often. Auto, I just need to click the auto button. My computer. Okay. I just clicked weekly. So guys, this is the Dow Jones on a weekly chart. Every single candle right now is a weekly, is a representation of a week's worth of price action. So as you can see, we've got this bit of an M showing up, and we've had a few weeks of pushing up, and yeah, going strong. So right now, did auto work? No, there we go. So now once auto's on, guys, you'll know you can zoom in a different way. I don't often have it on. I just hit it if I want to kind of recalibrate and get to where I want to be. So from there, guys, I'll go down to a daily. I'm taking stock of levels. I'm looking at, okay, there's a high. We've cleared that high from the 6th of March. We're now above that. Next stop would be, we're potentially moving further up to the, I'm aware of previous highs, previous lows, things like that. I'm aware of what the 20 and the 50 are doing. I might even, for those that are doing dynamic edge, I'm aware of what a MACD is doing. So we're above the 0 line on a weekly chart, just to be aware of that. Daily, I'm gonna roll down to that. There we go, just checking what's in front of me. So now every single candle's worth a day, guys. And so I would encourage you, once a week, go and do this kind of analysis. Go from the top down, the weekly, the daily. Go and have a look at where things are at, where we're sitting. So daily has popped into what would be a hopper over there, which, when that happens, sure enough, price, normally pushes up pretty high. We've got the 238 in here. We're above that. We've pushed off. We're now level. We've broken that high. So either we're about to hit all these stops, which we would have reversed, but, we're now clearing that. Next stop, we might be going higher. So especially based on that MACD. So going down, guys, 4 hour, I look at a 4 hour pretty often to get context of what's going on. So look at that. We've now got a super trade on a 4 hour chart. So that being red and blue cutting through the 238, price moving up, cleared that high nicely. So yeah, we'll see. I mean, we've got a red star, which obviously indicates there's, point of resistance or a high that's been broken. But yeah, guys, just moving on through, this is what I do. I look at all these different levels. I see what's going on, because I will spot I'll spot patterns on different time frames. I'm sure you guys are the same. Sometimes it's a little hard to see, looking, patterns are great, but it's all about context. So if you like seeing some really amazing pattern on a 1 minute chart, that's going to bow to the context of the 5 minute and the 15 minute, and the pattern that's forming there. So it's always helpful just to be aware of context. So 1 hour chart, let's put on auto again. There we go. So wow. Yeah, 1 hour chart, guys. We have been in buy mode. Yeah, since the 27th of March, just pushing up. 30 minutes, just having a look at everything here. Sorry, this feels a little bit slow. Starting to get a bit flat, like it's been, a little bit flat since yesterday there. So rocking down to the 15 minute. So guys, looking at this, the 15-minute chart on Killshot has been in buy mode. Aside from this little moment here where you had it swapped over into a green star, and I guess there as well. A few little moments, but really we jumped into here on the 25th of March, Saturday, and prices has been going up ever since. And so plenty of opportunities obviously here to sell this down and take this counter trend trades, which Mike has taught us on how to spot those. But really we're still in buy mode. And again, just when we thought like we're getting close in here, these moving averages starting to come together, what do? We bounced like proper out of there. So that's our 15-minute chart. So for those, we all know with Killshot, we're looking for the 15-minute to determine the trend. So the trend is up, but at the same time, we're now battling highs, and we've got a lot of highs, and the MACD on the 15-minute is approaching going down. So that I'm definitely looking at. But right there, 15-minute chart's doing that. And then, if I've got no lines on this chart, guys. So if right now, if I was to be drawing on this chart from scratch, I would actually go further out. Like I skipped doing that. I forgot I've got nothing on this. So I would go to maybe a 4 hour or 1 hour. And I'm going to start looking for highs and lows. I would definitely be coming in here and utilizing some of these tools. So we've got these drawing tools here, guys. We've got trend lines, arrows, rays. I'll show you how I use rays, horizontal, and etc. But I would definitely be coming on here and hitting a horizontal ray. I'm going to click that, and I'm going to go to this high. Say before price was on the way up, before we cleared this high, I'm going over here and I'm dropping a ray over there, just to be aware of what's going on. This magnet tool, I like to have that on. You can have varying degrees of strength, but it just means that it's going to take whatever I'm drawing and it's going to snap it to the nearest wick or the candle. Thanks, Lisa. There you go. So yeah, I'm drawing rays like this, and you can have whatever color codes you want for this kind of thing. For me, if price is coming up towards it, I might have it like on a yellow, like that's like a bit of a golden target. That price is going to come up and hit. Sure enough, you can see where it paused, pushed through, came back down, messed around. So things like that, guys, I'm always going to be aware of whatever the levels are. 634 highs of day, week. Thanks, Wayne. So yeah, chucking these on, going around, whether it's previous highs that we've got in our battle. So we've cleared this, we've broken above this area here. So where's next? But if we go further up, you can see, look at where price fell from. And so 4 hour chart would be a bit better, just that'll get rid of a bit more noise. Zooming in, come on, there we go. Right, so we're over there. So sure enough, I would maybe take a ray and just be aware of, okay, price rejected like crazy over there, 715. But I'm also watching, okay, 845. Like there's a big difference. There's like 130 pips between there and there. So I'd watch that zone as price starts to get towards it. And sure enough, I'd be watching higher up as to, okay, there's a high that looks pretty significant to me. And I'm just being aware of these things. Like I'm drawing these lines, putting them on the chart so that when I'm way to the right, I know that to just be aware of, okay, price is about to approach a zone that I might reject from. Because yeah, price likes to make decisions at key levels, and they don't often just smash straight through. Can happen, but anyway. So those, there, guys, those are a whole bunch of key levels that I would naturally be doing. Same thing on the down. Like if I'm looking at this, so price was call this a rally base rally. So price came up and paused for a little while, and there's some sellers over there, and price went up. So there's some poor guys that decided to sell this, and price went up crazy. So naturally, when price comes back down, price is going to do something here because there's some people waiting to get out of this. So those sellers want to get out of those trades. And so I'm not going to get into that too much tonight, but yeah, you're going to start learning about certain candles and how price moves really, really quickly. I was watching this, I believe this was, when was this? Yeah, last night. So anyway, you'll learn. I'm not going to get too much into candle patterns and things like that tonight, but just some things to start being aware of. So we're on a 4 hour. Let's go down to a 1 and just see how that noise looks like over there. See, now it's a whole lot more noise. So if price starts to come down tonight, guys, this is what I'd be doing. I come in here, woof, computer is freezing. And I'm looking for lows. Let's go down to, yeah, let's drop this down to a little, no, let's stay there. So on a 1 hour, I'm looking at, we're way above here right now, but like for instance, there's a low, and this is not, it looks really insignificant on a chart like this, but when you're thinking about price, can you show you drew those levels again? Yeah, sure, Zef. So I'm clicking in here, up the top up here. This is a ray tool. It's a horizontal ray. You find it in here, you click on that, and then sure enough, you can then come across and click it with the magnet on. This magnet tool, I like to use that because it'll snap it bang on the wick that I want to get it to. So, there's some lows over here. Look, this is me being a little pedantic, but when price is dropping like crazy, I just like to know the zones. This plus pivots for me is pretty powerful. So I know this is going to look silly. I'm not going to draw a whole lot, but just to give you context of what I'm going to do, because the price, we're zoomed out right now, right? We're on a 1 hour chart. From where we are right now to that line, that's 350 pips. We all know that the Dow can do that overnight. So if this started to drop crazy, I'm aware of these levels. So like those are some real pedantic ones. If there's a low, like price came down and did something there, price came down and did something there, and etc. So I'm aware of those zones if I'm doing something like this. So for me, the next big thing that I'm really into is trend lines. So there's Lots of different ways to draw them, but what I have learned, which is crazy powerful, guys, is from Curtis Cobain. I did about 14 hours worth of his teachings on fibs and trend lines and supply and demand zones, all that fun stuff. For those of you, if you know, you know. So Fibonacci tool is in here. Sheesh, I haven't drawn one for a while. I don't utilize it as much for this kind of stuff anymore, but here I am. There we go. Not enough coffee. So a lot of fun stuff that happens with this, but let's just draw one here for kicks. So from this low, I'm drawing a fib across to this high. Take it across. And where did price stop? So price ran up, price came down, and yeah, I'm just, a lot of these levels I'm very familiar with with other forms of stuff, but for now, it's just part of what you can learn in the bigger picture, but I'm not going to get into fibs. But he taught that, Curtis Cobain teaches that in detail. So standard trend line, guys, standard trend line is this, but I'm going to teach you something that I really like to do to get accurate with stuff, is I like to use a ray with 2 points. So this one right here. So the way Curtis Cobain teaches trend lines is you're looking for a low, you're looking for a high, you're looking for a higher low and a higher high. And you can adjust your low, your second point of your trend line based on having a higher high. And obviously in reverse being lower lows. So Alt J is a quick way to draw a horizontal ray. Thank you, Elaine. I need to remember these things. Okay, I need to start. See, I'm learning. Alt J. Okay, there we go. I can probably program these things. I've got so many buttons on my mouse and keyboard. I should get a little bit more smart. So anyway, for me, this trend line is not going to look like anything significant right now, but from that low point there, I can then go and magnet snap it to that low there, because we've had a high, we've had a higher low, and since we broke that high over here, we now have higher highs. And so this right here, promise, you'll watch in the future, something's going to happen. Eventually, price will respect that. I can show you examples over and over and over again. And so for me, if it's support, I like it to be green, resistance, red, etc. But that's one way to do that. So another way, let's get to where we are right now. So looking at this, you don't have to always do a ray. Like sometimes you just want to draw different. Oh gosh, this is so much slower tonight. So looking from there, I can magnetize to there, and say this was a significant level. Let's go straight through that and see what happened if I'm holding it on there. So price went, broke through, pushed back up. So that didn't do too much. But say then now we've got this higher high, we go off there. So we're going, now look at that. Now we've got 2 points that are lining up right there. So we've got a point, price is up here. So sure enough, I wouldn't be surprised if this line gets respected again or something happens there. Let's zoom into a 15-minute chart and see what's going on over here. So this is where we are now. You can see like those green line, like those yellow lines, guys, those green lines, they're a long way away. But I guarantee that if price starts to move dramatically, those are areas I just want to be aware of. If I'm zoomed into a 1 minute chart somewhere over here, I want to remember what's happening to the left. So let's do this. You can see here, here's another place where I would put one in the midst of this move and this trend. I'm definitely looking for, I can see over here, and I'm going to magnetize it to him and see how many points I can connect up through this. So I'm looking at this, and it's going to cut through price up at the top. But see how right there, look at that. See, sometimes when you've got that a spot, you can see how price came, rejected. We pushed below, try to close below, and then rocketed out of there. So that right there, between this point, guys, and that point, other people are drawing these trend lines. They're seeing this candle close below and thinking, sell. We've closed below a trend line. What happened after that? Fake out, breakout. Boom, price explodes. What was happening underneath the hood right there? Yeah, we're still above. So anyway, enough. So price then comes back, retests that trend line and rockets off. Price then breaks below, comes back up, almost touches it there, and almost pretty much, if I zoomed in, it's looking pretty close. I didn't draw that like a ray, like I said, I just drew that roughly. But can you see how from that first point of we've got a low, we've got a higher low, now that we've got higher highs, like later on, these levels, I've seen this time and time again where price just seems to come back and retest and respect previous trend lines. So leaving that there for now, let's zoom in, see what's going on. So these EMAs on the 15-minute chart are still yeah, we've still rocketed back out of there, but we are struggling to get out of this zone. So what I also like to do is come in and mark out, like, depending on the time of day that I'm looking at this, I like to go and get a vertical ray. This is just me. Like, you're going to get a busy chart if you do this. You figure out whatever suits you. But I like to know where London is going to happen, for instance. So where was that? We were 1700. I'll come and do something like this at the beginning of the day and be like, okay, that's when London's opening. So if price is moving around here, I'm aware of stuff. And say you're like about to open a trade and it's like 15 minutes to London. You're like, oh, actually, wait, there's my big blue line. London's opening, or New York opening, all the news. If you're aware of news events, nice way to just get it in front of your face so you don't forget. You don't accidentally open up a trade right before a giant red folder news event. And we haven't got any of those right now, but economic calendar, dailyfx.com. This is a site that I use. You just go in here, you put in your time zone. It's going to give you all the info you need. And so today, where are we? We had some news at 2 this morning. That's probably why things went crazy at 4:30. So medium, I don't really pay much attention to. Next up tomorrow, I think we've got just a whole lot of medium. So there you go, nothing crazy, but stuff to be aware of. And if there's something like this, there's a red folder and you're going to be trading, I will go and draw a vertical line on my chart so I don't forget it. So there was London. If you really want to go back test and have fun, guys, go. I draw on my chart that I mainly trade off. I've got these blue lines on every single day of the week, and I can look back and then go, oh wow, look at that. London really was the high or the low of the day, and then look at our price moved for maybe like 45 minutes and then did something else. Like it moved in one direction to go another. And when you start to see that over and over and over and over again, you'll start to be able to see these things like Mike does, where it's like, okay, guys, expect this. So what happened? 15-minute chart, 1, 2, 3 candles. Doji reversal candle on the 15-minute chart, and then the push up. And where did we come? I mean, we didn't come to. I mean, we obviously broke these lows here to if there were any stops underneath that. But again, 3 15-minute candles pushing in one direction, and then price went up quite a lot, and now it's figuring itself out. So vertical lines, that's something I like to do. You can draw whatever, guys. You can draw obviously, trend lines off the top and bottom, and look for patterns and all sorts of things. But yeah, like there's a gap right there. So when the market opened, sorry, this is going so slow for me tonight. I've got to probably clear some space in this hard drive. So you can see this gap right here, guys. If you're brand new, I want to explain the gap. So the market closed over there on Tuesday. Where are we? There's another one. So which one was he? That was the weekend. So when the week came to a close, we closed over there at 333.40, and then on Monday price opened down there at 268. So what is that? So the market shut down over there, and then over the weekend a whole lot of orders must have come in and opened over there. 70 pip difference. This is why you do not have orders opened over the weekend. You get charged for it. At the same time, even if you had a stop loss, say you were in buy mode and you had a stop loss here, if price gaps over, it'll gap past your stop loss. Your stop loss is not triggered by a gap. So if your stop was there and price gap down there or gap down there, it will empty your account. So holding trades over the weekend, or even when the market closes for an hour in the middle of the day, is risky. Really, really risky, unless you feel like you've got a good buffer or you believe what's going to happen. I mean, yeah, this kind of movement doesn't usually happen when I'm open. But today, let's just have a look at what happened today, because gaps are kind of like self-fulfilling prophecies that like to get filled. So, sorry, computer's stressing out. So it wasn't a big gap today, but when price opened up, sorry, let's zoom back out. There we go. Okay, so price closed there at 9 a.m. New Zealand time and opened over there, 15 pips, 16 pips lower at 10. So there's a 1 hour gap where the market closes every morning for us here in New Zealand, and whatever your time zone is, there's an hour. And then after that, sure enough, basically what happens is when the price gaps, there's a whole lot of sell orders that have been put in place here that have pushed price lower down, and the market opens there. But there are some orders that have basically not been able to get filled. And so price has to eventually come back and fill that gap. So if price is chilling down here, especially coming towards this trend line, I would not be surprised if there was a bounce and it came up and filled this, or came up and filled this and took out the high, which we've done now. And from there, once that gap is filled, you're like, okay, we can move along. But if you see a gap on a chart that is not filled in, like say there was a gap down here, there was aggressive buying, and we've got a gap, I would have this marked out on my chart in bold colors, knowing that price is definitely at some point going to return. So if price starts dropping, I know where to expect it's going to go to some degree, but nothing's guaranteed. It's just, helps indicators. So where are we? Let's see. If you jump on the charts during the day, about an hour or so after it opened again, how many hours should your POC be? Still 6 hours. Yeah, so good question, Lane. So with the POC, yeah, when there's a gap, I'm honestly not too sure how Jay approaches that, because he's not normally on near a market, like he's open with New York, but London's been open for a while, so he's drawing it back through an open market. But that's why I enjoy this little tool, because it's just going to show me right now, even on a 15-minute chart, like there, for instance, is how this would determine that POC, a previous one. Drawing it manually, yeah, sorry, don't quite have the answer to that one. But I would still be drawing it back the same amount of time he suggests, knowing though that if a new trading day has started, it's going to require new info. Like that's why that new line starts from the most recent trading zone. So yeah, and at the same time, guys, if I'm really honest about times of day to trade, I mean, look at this. We had New York volume, New York closes. We have Asia. Like, I mean, what is our range today? Like trading in this range would have been a headache and really risky, and quite honestly, probably just a waste of time. So until London opened, you had a range of 55 pips pretty much the whole day. That going up and down, waiting for an actual signal, etc., would have just been nothing worth getting excited about. A lot of time spent watching a screen. London opens and you get more than that amount, more than the daily volume in 3 15-minute candles, 45 minutes. So my suggestion is, if you want to be, if you're looking at charts during the day, by all means, have a look. Sometimes there's a move, but for the most part, if you want to get really, really efficient, just think about London and New York being open, one or the other. You're far more likely to get trades that are actually going to move with some significant volume. And you can set alerts and things to be aware of prices being broken during the day, things like that. But for the most part, during the middle of the day, it's just going to be a whole lot of range. Not always, but for the most part, it's never going to be what New York and London can provide. So yeah, guys, let me think. What other little things? So we've got a lot of questions recently about short positions, long positions, and that. So I'm going to zoom in right now to the 1 minute chart and see what things have been looking like since. Yeah, let's just zoom out. So we had so we're in buy mode on the 15-minute chart. So obviously that initial push down would have been a sell signal, which following the rules we would have been ignoring. Then we get a buy signal, and so right there you got a buy signal. We just reject. Yeah, so we've pushed nicely off. What was that? That was a previous key level. Can't remember which one that was, but it's there for a reason. I've already forgotten. But there you go, horizontal yellow line. I'm going to stress my computer up trying to find it, but there we go. There, even look at that. Wherever that line goes back to, look how it was respected. Here, the market gap down to exactly beneath there. Fascinating, guys. These levels. Sorry, I can't remember which that. Sometimes I put labels on them, but I didn't for this one, just for an example's sake. But right now, looking at this buy signal that we had, I mean, this is beautiful. So there we go. We've got a buy signal right below the 238. But then if you wanted to wait for a pullback, red and launch off, I don't know if you could call that an engulfing as such, because it doesn't completely close above the top of the previous candle, but the pullback would have been right there, pulling back into the averages and then explode. So you could have taken it right there if you're confident that this market was shifting around. But then from there, just to give you an example of a buy, a long and short position, because I know some people have been asking about this. So for right now, a long position in here, this is just an example. So let's just say, guys, you entered this trade, bang on the signal on the close of that candle. Clicking it there with the magnet tool helps us to lock it in place. Right now, this is a risk to reward ratio of 1 to 1. Man, it would have entered the buy on the red candle. Noise there, so right there, if the sell signal, if the buy signal went off on a red candle, that's no good. Like that's worth having a second look at and going, oh, I'm not so sure. But just because this candle was red doesn't mean that that's not possibly a more possibly advanced place to enter, knowing that we've got a buy signal. We're 15-minute chart is in buy mode. We've now got a little bit, we've had a pullback, or a, you could almost call a manipulated push down, possibly, with the London market. And now we're back in with a buy signal. So now we have a 1-minute chart coming back into alignment with the 15. And so what you'll, let me do this. So for instance, we're on buy, let's just look at what we're in. So we're in buy mode. We already looked at all those other ones. We're in buy mode on the 15. What's the 5 might be by now. Yep, 5-minute is currently, it wasn't then. So we were in sell mode on the 5-minute. I'm just giving you some examples. 3-minute during that phase, went into sell mode there, and we came back into buy mode up here on the 1. So we're still in sell mode in 3-minute, and now the 3-minute has caught up, and we've got a signal on the 3-minute up there. But just to give you context, that guys, so when a trend is reversing, the 15-minute chart obviously is only going to swap from buy mode to sell mode when you've had the 1-minute's going to happen first. You're going to see a trend reverse on the 1-minute, then the 3-minute, then the 5, and then finally the 15 is going to cross, and you're going to be in either buy or sell mode. At that point, when the 15-minute crosses, it's most likely that the 1-minute is probably going to be in the right mode on a reverse when everything else is pushing. But right now, that's just to give you an idea. Like, we've been in buy mode on the 15-minute chart the whole time through this little counter trend sell, but now we've got a buy signal that lines up with the 15-minute. So now we can actually think about this trade. So I've got the opacity turned really low on this just because I don't like seeing them that much, but hopefully you can still see. Can go into settings and quickly just turn that up. So no, maybe not. Really stressing out. But I'm going to walk you through all this stuff. So visibility, you can adjust so many different things in TradingView, guys. You can get lost in the source of all these different things. So I'll just turn these way down so I don't show up as much because I don't need to see them. But say you would drag that up to there, whatever, and then on the green, just so you can see what we're measuring here a bit more clear, drag them up to there. There we go. Oh, that's too much for me. That'll do. Okay, so for right now, it's we're looking at 1-to-1 risk to reward ratio. We've got currently this is drawn at 18.7 pips up, 18.7 pips down. If we were to be drawing this, that's just where it threw it on for us in itself. But if you were to actually put a stop loss here, you know, if you're entering off here, you know, the real aggressive spot will be below this low, but that's a pretty tight stop. You know, you're looking at 10 pips. Doable on the US 30, very likely you're going to get worked out on 10 pips. But this being another low, you could go beneath there. The extremely conservative spot is there, but that's massive. I mean, that's 35 pips. Then you're targeting 70. I'm not sure if we got that, but let's just say you're going here. This to me is, you know, anything 15 to 30 pips on the US 30 so far. I've just been messing around with it for the last few weeks and learning it. Different to the NAS, a lot more volume, especially on the New York volume, not so much on London. So you'll see more moves on the NAS with London because London, to give you some context, the NAS 100 is the NASDAQ. It's a compilation of the top 100 tech stocks, so tech companies, which the UK would care about. The tech companies are not necessarily American companies, but the Dow, which we're looking at right now, the US 30, is the top 30 companies in America, which are not as much of a big deal for the UK. So that's why we might see a little bit less movement on the Dow during London, but yeah, anyway, that's a little bit of that. So right now, say we had a stop here of, you know, you could actually, let's just see, where's that? So that's 15. Say you went for 17 pips. No, let's go for 16 because that really suits our stuff with the gates and 30, targeting 32. So that would be a 16 pip stop. So the stop loss would be down here. So you would be, if you were entering this trade manually on, say, like I still do on my phone, I would be entering the stop loss of, let's look to the right. You're looking at this and the price is on the side over here, 33568. That's my stop loss. And then 16 pips up is obviously my entry. And then I'm looking for a 2-to-1. I'm risking 1 to make 2. So did we get that? Yeah, we did. But bringing it back down, where did we get 2-to-1? We got 2-to-1 over about there. So if this signal had popped off, guys, and I'm looking at being, you know, putting a tight 16 pip stop there, I'm targeting this level. That's where 32 pips is. that would be risking 1% of my account to make 2, or risking 2 to make 4, whatever it is. It's whatever your risk appetite is. But say you're being real conservative, you're risking 1% to make 2%. That would be your target. And so the target being, you're going to see this on your trade, but 336.17. That right there, price came down. Say you took it on the signal, price came down, hit the moving average, rejected, moved up, broke the 238, pulled down a little bit, and then just went and one little pullback, and bam, you're done. How quickly did that happen? That way you can measure left to right. 12 minutes, guys. Target acquired. 50-minute chart in alignment, 1 minute buy signal, 12 minutes, you're done. And how long after the open if you're watching? If you've been watching since London, an hour and 19 minutes. Now, an hour and 19 minutes, you were watching paint dry for what, an hour and 7 minutes? Something like that, if my maths is right. If you're watching from London and being patient and recognizing that this was all counter trend, but then you just needed one signal to be in alignment with the 15-minute chart, take that signal, close your trade, possibly walk away. Now, what I would do if a candle was looking like this, let's see, yeah, no reason to exit just yet. I'd be here. So price, now when you choose to move your stop, I know Lisa had some great stuff in the chat about this the other day. When you choose to move a stop, and I'll catch up with the chat in a second, guys, let me drag it closer. When you move your stop, is obviously going to be discretionary. You move it too soon, you're getting worked out. So say that price came down straight away, you're in the red instantly, basically from the point of entry, which go back test, go have a look at what price action does after a signal, especially on the US 30. A little bit of a pullback quite often, depending on if it's London or New York volume. But right there, okay, price is now you're into profit, and sure enough, it pulls back again. You're like, oh man, and now you think about your mindset, like, what's going on? Was this a good signal? Are we just going sideways? Are we going back down? Are we following this, what looks like almost a trend down? But then, okay, price is in profit. We're moving. Strong candle, strong candle again. All right, so now we are, let's measure this. Let's have a look. From entry, there. Now price is, say at this point, this candle is closed, looking very bullish, 13 pips up, 13. Now we're moving, for me personally, guys, once I'm somewhere around the 12 to 15 pip zone, I start thinking about moving myself. And I might move it to, I often move it 1 pip into profit at least, not break even, but that was just, it's whatever you want it to be. And then from there, guys, a bit of a pullback, and then again it shoots up, etc. Once it starts to get above 20 pips, I'm like, okay, I'd like to lock in 10. I might move it 10 pips into profit. So no matter what happens, I have locked in 10 pips. I am getting that, and then price may or may not wick you out. I might keep going. So this is the patience game, learning how markets move and when to move your stop. And so at this point, I might decide to either close my entire trade, or I might close 80% of it, or 90% of it, or half of it, whatever you think, depending on what you're witnessing and how much you want to bank instantly and just be done. Then I might lift my stop, say up to here, and then I've closed some, lifted my stop, or I might just, another way to do this, like James Leone would teach us, lift the stop, lift the stop, lift the stop. Okay, we're at 32 pips, great. My stop is sitting there, I've closed nothing, but the price is still going. Sure enough, price keeps going, price keeps going, price keeps going. At some point or another, I'm going to be closing profits or keep lifting my stop. And so that's a way that, it'd be quite painful to set a TP and this happens. Cool, you can walk away, job done, you got your 2%. But I would definitely feel like I got off the bus a little bit early on that one. So this is why I like to lift my stop, lift my stop, lift my stop. And sure enough, with a bullish candle like that, bit of a pullback. Look, that pullback came pretty close to there, but wouldn't have quite wicked you out if your stop loss was now moved to that 32 pip zone. But again, from there, you can do whatever you like, guys. I definitely lean towards closing a large portion of it very close to that target, so it's done, it's in the bank, as opposed to lifting the stop. Because if you lift that stop up and it's close, what can happen is you'll get wicked out, and then you didn't get your full 32 pips. But if you bank some of it, then at least you're done. You've got something in the bank, you've got some profits. It might not be the full 2%, but you've got something. But if you've left 20% of it on the table, 10% on the table, sure enough, that continued to run, and then you could close that out, say on the red star, which would have been moving, or at this resistance level. You could have targeted this green resistance line right here. So without waffling a little bit more, let me check out what's going on in the chat. Buy signal, how does getting your stop loss hit beyond your entry affect your risk reward? So stop loss has been moved. No, so at least not a silly question at all. No silly questions. So stop loss has been moved, and yeah, so at this point, if you moved your stop loss 10 pips into profit and you got wicked out, like, or say you moved it, I don't know why this is doing that. Yeah. Let's get this tool and measure this again with you here. So sorry, am I frozen? I have frozen. TradingView has frozen. My computer is stressing. Hopefully you guys can still see me. Hopefully Zoom's still working. Oh my word. Guys, I don't mind if you unmute yourselves and talk. There we go. Something's coming back. Can you hear me? Drop some love in the chat if you can hear me or see me. Otherwise, okay, we're still on. Thank you, Zeph. You never know, right? It's just me like talking to myself in the room. Sorry, it's just slowing down. I can hear the fan in my laptop. Okay, cool. We're good. Thank you. We lost that buy position though. So Lisa, your question is, yeah, it's pretty simple. So from, wow, yeah, TradingView is still not liking me. So there we go. We're back. We've got that. Okay, it's just had a bit of a refresh. Having a think about itself. Looks like I may have dragged that over by accident. Just letting it load. But let me see if I can explain it without drawing it. So if you move your stop loss and you get wicked out and you haven't achieved the goal of that 2-to-1, it's just that trade is done. And whatever you got from that trade, say you had a 32 pip target for the day. If all pips are equal, if you say you got 10 pips out of that trade, you're now aiming to get the remaining 22 from another trade. If you have a daily target that you can be measuring in pips. So the risk reward, it's you've risked 1 to make 0.5 in that sense because you got worked out early, but you still bank something. So yes, your risk to reward is off because you got taken out early. It doesn't really matter. You still had a winning trade. So let's play this out. Now I can draw it. If you entered there and say, because this is an example of a candle that would have done it. Say you moved your stop, like say you moved it 20 pips into profit and then that red candle happened. You were going to get stopped out pretty quick after that at 23 pips. You've now, if that was the case, you know, your risk to reward is, you know, that's what it actually is. You risked, you know, 1 to make 0.42. No, sorry, 1.42. That's right. So you haven't made your full, you know, risking 1 to make 2, but you've made bank, you've made some profit. So then this is just a measuring tool. That's all this is, to give you an indication of, okay, if my stop loss is there, this is where I want to target to be. So all that being said, if you do get stopped out, it's just reset. You're aiming for another trade, you've got another win coming. Then if you get another entry, I mean, right now there's, you know, prices come back down, we've got a sell signal. You'd be waiting for a powerful move up here for a buy signal to pop off. But yeah, not sure what's happening just yet. I'm just looking on the fly to see if I can draw a trend line without this thing stressing out, because I can see what looks like a touch over. Let's see. Let's just see what's happened there. So there, we had that break over there. So there, 2 points. And that obviously messed around a little bit, but what happened? Price paused, broke through, retested the trend line and broke down. That's what I mean about like drawing the lines a little bit further, because that kind of thing happens all the time. Price will break, retest, reject. But yeah, so right now, I mean, now we're somewhere over here. Just we haven't really got a higher high yet from that point. So I'll be looking at a little bit of that right now. Below that, for me, this isn't necessarily all that valid because we haven't got a higher high yet than that previous high. So that's why I like this spot. But that's just something that's how I've learned to draw them. But there's multiple ways to draw these guys, and I guarantee that you're still going to see lines respected. You're going to have a lot of proof both ways. But I'm just looking at that right now and thinking. And you could get real crazy and draw like, okay, so we've got this resistance line here and we've got this low there. Let's just do that. And you're going to see these levels either tested, rejected, broken, etc. But coming back to that question, I hope that makes sense, Lisa, in the midst of, yeah, this is just a measuring tool. And so you're just going to hit reset. Let's see, what else is happening here? You can move Zeph. If that buy signal closed below the 238, which one of those candles at the pullback would you have entered on, or purely Okay, so that buy signal had closed. Let me just double check below the 238. Which one of those candles and pull that? So that, you know, it's gone off. We're right below the 238, which can obviously be resistance, but once you're through it, you know, it turns into support. But it's understanding the trend, the context, what's going on. Right now we had some, you know, it's London, so we've had a push down, which is often, it doesn't normally, from my experience, go one direction and gone from London. You have what is almost a manipulated push to go and grab some money, and then it goes the other way. So I'd be looking for this to turn back into buy mode, solely on that, and then, but reading it as it plays. So right now, buy signal pops off right at a previous high that we haven't broken yet. So I'm thinking, okay, well, we've got to break this high. But sure enough, you know, EMAs are coming up. I'm just watching there, just seeing what's going on. But anyway, seeing if we might get another buy signal in a second. Let's look at the 3-minute chart for a second, see what that looks like. And what you can do, guys, if you want to, what I like to do is, I have more than one chart open at once. I actually have about 4, but you can go up here and you can select different layouts depending on your TradingView package. If you've got a free version, you might not be able to do this. I normally have 2 like this, and I've got them programmed for different things. I don't want to mess you guys around with different stuff right now. This is a previous strategy that we're running with, and so I might have a split screen with a 1 minute and a 3 minute, something like that. But you might just have a 1 minute and a 15 minute, or 1 minute and a 3, both with kill shots. Just stressing out. There we go. So you can see what's going on different time frames and not have to jump between them. I like to use the keyboard as well and just push the button and it automatically shifts to the 3 or the 5 and the 15. You just type it in, hit enter, and it's going to do it straight away. Real quick way to just bounce between the 2. So actually, let's go back to that 15 minute. Bouncing out of there, it's closing in 7 minutes. And I'm always aware of when candles are closing. It's 9:07, so the 60-minute candle just closed. Yeah, just taking it all in, looking at what's going on, looking at what state of kill shots in, kind of candles, shapes, patterns, is looking for all sorts of things like that to gain context. And I'll just click through a lot of these. 3-minute. Okay, sweet. Right, so back to the 1. Oh, not that. Let's see, guys. We'll wrap up in a few minutes, but let's see. Where do we get to a question? So yeah, Zeph, so to answer that question, where would I've entered? I like to naturally just wait for a bit of a pullback, especially if, you know, we're right there. But if this is, you know, feeling like a strong trend up, like we've got a higher low already from here. We've got a higher low. We haven't necessarily yet got our higher high. As soon as we've got a higher low and a higher high, like at this point, we've broken that high, then we have a bit of a trend happening. At that point, sure enough, once that happened, we've got a little bit of a pullback and gone. And price has not yet come back to that level. So you would still be in profit on that buy if you didn't get out, but not by much. Well, yeah, actually, 30, yeah, anyway, 25 pips. So right now, buy signal, share the high. Let's see what's going on. Wanting to push back up. Looks like some buying momentum right there, without a pullback. Just checking, gapped a little bit up. That might be because my computer's stressing. I'm looking at previous levels, like there's the London open level right there, which we pushed above, but you'd be amazed at how often these previous levels come into play. So let's see, yellow star, it's not a red one. That's the main thing. We've got green one is down here, red one is up there. So we've got some space, guys, until if this is sure enough a trend that's moving. We've had what would be 32 pips there, a pullback, and now it wants to go again. It's still putting in higher lows, so we're still in an uptrend, and sure enough this thing is going. So knowing that this was happening, we've got this trend moving up, we've pushed back down. Like the only thing I don't like is how high are we? Where's that New York? I don't know if I have to zoom out a bit. I just want to be aware of the previous highs up here. That's what I hadn't marked yet. So I like to do these, like I said, which I hadn't done for yet. Things like that, which sure enough we did. We came and took out whatever stops were above there. And, you know, we pushed down, but it's not like we grabbed the stops and went down. So we're still actually possibly coming up higher. What's higher? Where is that New York level from? Oh no, it's labeled on a different chart. Sorry, not this one. So that was the New York push this morning. That's 2:15. We had that news release. I think it was 2 something, 2:30 maybe. So sure enough, we've broken that, just a big wick and pushed back down. But now, why are we going back up again? Like we've got the stops. So either this thing is really a strong trend wanting to push higher. Yeah, let's see. Remember, London pushed down first, and now looks like it wants to go up. So zooming back down, that 15-minute candle closes like that. That's a 15-minute engulfing, which looks pretty good. 3-minute stretches out a bit, also looking pretty good. In buy mode, remember we're on buy mode on the 3-minute as well. So we've really just had a 3-minute signal with a pullback, and now starting to, watching the angle of those EMAs. They were wide there, they compressed a little bit. Now they're going up again. Zooming back into the 1. Seeing a bit of a W there on that 3-minute chart forming. So let's see what happens there. If that's the case, yeah, just watching. There's that pullback. See if I'm just interesting to watch. I'm not personally trading right now, guys. I know some of you are, but yeah, I'll be looking at a few more things right now just because of the way that I'm trading, but just taking it all in. If this is playing out, like if any of you guys have gone through the 400 series in the Forex Academy, you'll learn about harmonic patterns, which are basically big W's and big M's. So they look a little bit different, but they can look like something like this. You've got X, A, B, C, and then when C is higher than A, D is usually higher than X. So I'd be looking for something like that. If that was, and I'm not measuring these things, and there's actually specific ratios of Fibonacci numbers that cause these things. But when you've got what looks to be like a double bottom or a W forming like that, like sure enough, look here, we had a little M. Inside of here, there's an M. Double top, push back down, and what happened? Was that one higher? Looks like it. So he was higher than him, therefore, what do you know? He closed higher than that guy. So right now, depending on where this goes, just something like these are the kind of things you start to spot after a while. M's and W's, things like that. Just watching action here and how this is going. That looks like a nice push out of there. That red is starting to push up. Let's see. Any other questions? So yeah, Zeph, I hope that answers your question. In terms of the entry point, if I was confident in the trend, I would have loved the push off that EMA right there, because you got a signal, pullback. If after that red candle, so we pulled back down and then we came back up and closed, this candle would have, see, this is what I don't get. He would have opened, but anyway, that close and open doesn't make too much sense to me right now. Might be because of how zoomed in I am, if there's not enough volume for it. But yeah, from there going out, broken the 238. Once you've broken that 238 and you've now got a super trade in there, it's gone. But bringing it back to this one, let's catch up on these questions. So Joel, when we wait for the pullback, does it always have to touch moving averages? Not necessarily. I mean, these moving averages are there, but it's never going to be like a perfect touch. Like for instance, I'm looking for ones that I'm not now. So there's one that's great. Sell signal, pull back to 238, and the red coming down, looking. I mean, there's not, but yeah, you know what I mean. Like it's going to happen, but not always. It's not like it's a golden rule that it has to touch on a particular time frame. But if it does, then there's a little bit of extra compliments. I'm trying to look for areas right now where it hasn't, but it's still been pretty powerful. I mean, like even there, like price went straight through the 238 and then, got above and went. So it's not like these lines are absolutely perfect. They're an indication of averages. So it's like, it's never going to be perfect, but my gosh, sometimes it's unreal, right? How they really do respect them. So it is ideal if this is where it's really ideal, when you've got multiple moving averages in the same spot and it's pulling back to multiples. Like if you had the 238 and like anywhere around here, if it got back to the 238 and the 50 or the 20 and it pulled back to that and there was upward momentum bouncing off 3 moving averages, that's highly likely it's going to reject and push up. That's why maybe that one didn't even get that close, because we've broken above, tried, not quite, boom, gone. Etienne, tip of the day: when you hit 1-to-1 on your stop loss, set a trailing stop just in case it wants to keep running. Yeah, there you go, brilliant. Bought 3 minutes before the sell signal. Wayne, you bought 3 minutes before the sell signal. 9:04. So that was a little while ago. So when was 9:04? Okay. Wait. So you bought up there. Okay. Yeah. I mean, we're in buy mode. We've got a buy signal. At that point, though, I mean, look at these moving averages. Moving averages are coming together. They're closing in like prices. It's that separation factor. Like, I know price came down and then it's pushing up, but the moving averages are coming closer together. So you need to wait for something a little bit more than, because as soon as they cross now, you know, if it was 3 minutes before, it was that one that was breaking out. I guess they were starting to widen, but they're still pretty close. So yeah, tricky one. But if your stop was not too far away, you might still be all right. Even if you bought the top of that one, even if you had, you know, yeah, we said 16. I mean, yeah, there's no structure would have been there. So 22 pip stop, you would have been safe if you took that and you were beneath that previous low. This low would have been really tight. 11 pips would never take a stop that low on the US 30. Yeah, let's see what else we got here. Adam, after a loss of 1 or 2%, do traders put more on the next trade to make it back? No, that's called revenge trading, and that's how you drain your account. So here's how there we go. Action. Where did price? Look at that, guys. I mean, that is close. I didn't draw that trend line perfectly, but can you see how even so from that point, keeping that line there, my price came back almost to the pip. I mean, to within 1, so to speak, and then pushing back up from there. So yeah. Adam, to answer that question again, risk reward and trading. So if you take a loss, like, I mean, James the owner would always say, like, 3 strikes and you're out. Like, if you got 3 losses in a row, take a walk, remove yourself from trading. You are very prone to going further downhill after 3 losses if your mind is just, it's just, you need to take a break. 3 strikes, you're out. Go take a walk, go do something else, get your mind right, unless you've got a bulletproof mindset and you can approach the next trade just like those 3 losses didn't happen. Trading in the zone, we'll talk about that a lot. But looks like we want to go up from here, possibly, watching. But yeah, so if you do take a loss, what I would suggest is, well, look, you've got to figure out your own risk profile, so to speak. If you're running the gates, the traditional way of running the gates is you half your risk after a loss. So because the risk amounts are incrementally huge, they go up quite quickly, and the gates is way more advanced. It's definitely not for you when you're brand new, but you could take that methodology on. If I just took a loss, if you're brand new and it's a way to protect your capital, James would always say capital preservation is the name of the game. If you half your lot size on that next one, say you took another loss, that secondary loss, you're only losing 0.5% on that loss and not a full 1%. So it's just, okay, you're now in the headspace of, even if I'm taking a loss, I'm not in the zone, you're just protecting your capital. If you take a win and you risked, say you risked 0.5 and you take a 1% win, now you're back. So you took a 1% loss, you then took a 1% win after risking less. So you went from risking 1 to make 2, you risked that 1, you lost that 1, so you won back. Then if you halved your risk and you risked 0.5 and you took a 2-to-1 ratio win, you've now won that 1% back, you're break even. So in that regards, you've now taken a loss, you've taken a win, and you're back at scratch. But you've also halved your risk in that sense. So then you go at it again. And there goes that buy signal. So there you go. That's moving up right off there, watching for where it goes. You know, anyway, no FOMO, just watching. But so yeah, hope that helps a little bit. It's something that you just got to get a feel for. But I guarantee if you are wanting to increase your risk after losing, it's natural to want to grab it back. That's called revenge trading, and it is the #1 way to go backwards fast, because it's now become emotional. And when it's emotionally charged, that's when trading goes south. Like if you are riding the highs of winning, you will ride the lows of losing, and it's not fun, especially when it's real money. There's no other way to learn that than the hard way, to be quite honest. Like demo just doesn't feel real. When it's real money, that's when you start to figure out what your emotional attachment is to this, and that's what we're working on. So yeah, 9:20 guys. That's let's see, where are the questions? Let's go. So basically need to convert risk reward to pips. Yeah, I mean, you can risk to reward pips. It's just measuring. Pips is literally just a way to measure. So whether you're measuring in a percentage or measuring in pips, it's the same thing. You're just looking for that 1 to 2 risk reward ratio. Man, that is a nice strong block print right there. Where's it going to? So even measuring this, let's just have a look at this signal that popped off a while back. Let's see what it would have, could have, etc. If you took it on the candle, oh, excuse me, you're below that low, yeah, 17, 18 pips. Looking for the 32. Look at that, how it's respecting that previous yellow line. Yeah, that previous high then is going to be the 2 to 1. So looking to come back and hit that high. Yeah, let's see if it goes. It's looking strong enough too at the moment. A little bit of bearish divergence for that turnaround, but not too worried. Still above. Check the 3-minute out. See what he's doing. Yeah, still in buy mode over there. Looking strong. We'll see. We'll find out. Let's go. Trading in the zone. Absolutely. All fallen victim to revenge trading. Yes. Not fun. Look at NAS. Oh man, my NAS chart's got way too many lines on, and I haven't honestly looked at it in a while. It's gonna look crazy. Does TradingView randomly close out your trade without your permission? Just a trade randomly closed. Okay, so if you are paper trading, I'm not sure because I haven't encountered that. But if you've got an actual trade with a broker, the only reason that they will ever close your trade is it's called a margin call. So when the amount that you are in drawdown on your current trade based on your leverage settings and just what you have in your account, they will automatically shut off your trade before it reaches your stop loss if they deem that it is taken too much of a large portion out of your account. So that's called a margin call. Google margin call if you want to learn a little bit more about that. But if it's happening on Demos F, then it's probably just TradingView. I mean, paper trading is not honestly the most reliable thing on the planet. It's there. It's a cool way to do it. It's nice because it's within the charting program. It's just, it is what it is. Took another 23 pips. Wayne, I love it. Absolutely love it. Hard up FOMO right now since TradingView marked up my trade. Sorry, Zeb. Yeah, not fun. But honestly, if it's demo, it's just wait for another opportunity. If it's real, then it's real. But yeah, just watching what's going on here, guys. I'm just taking this in. I'm seeing this is what I'm seeing right now. If this plays out, I'd be looking for. I'm seeing the early formations of a flag that I would be just, I like to see if these patterns play out and just to test myself. So I'm looking at something like that. I'd be just watching to see how's price going to respect these levels now moving forward and make him red. Little things I like to do. But yeah, just aware of that. It's like prices come up, come down, bounced. If we bounce, if we break, if we retest, we could go. That's what I'll be looking for with that. But yeah, interesting. Just that yellow line right there. I mean, I'm real tempted to go back and see what the heck that was, because it's not like 33635 is what it. Here we go. So Wayne said something about 634 earlier. There must be something there. Yeah. Anyway, double top forming Grace Ella. Yeah, possibly. I mean, that's what we have right there. Currently I wouldn't call this divergent yet because we've got a lower. I mean. Yeah, so if this came higher, we would then have what we call a higher high, and on the bottom we would have a lower high, and then that would definitely be like a lower high on the histogram and on the MACD indicator as well. That would then for me say, yeah, okay, turning around. But we do have it over here. So this here being a higher high, that a high, that's a high, and then directly beneath that we've got that one and that one. That's bearish divergence. So as soon as this turned opaque, sure enough, yeah, boom, pullback. So in terms of this being a double top, I'd have to look at a different time frame, but it is possible. That's why I'm just taking into account what's going on. Like we rejected this level, obviously, like rejection. Try to push it a little higher, grab some stops, rejection. Came up for another go, not breaking that level. And we kind of closed above, but not significantly at all. Like if we have a 3 or 5 minute candle, like properly, well, I suppose that was a 3 minute candle, but it was on the, we'll see. If we have a proper 5 minute candle or something close above this level, I'd be pretty convinced then that we're moving up. And it looks like we're getting there right now. 15-minute chart, if we're looking there, it started to go back up again. So we came back down, didn't quite push all the way through into the red zone. It's looking pretty strong, guys. So this is where high time frames come into account. So looking for, we're still a buy mode on the 1 hour, the 4 hour, etc. Like that's where, yeah, looking at all these different bits and pieces, there's solid reasons for this to still go up, like we looked at earlier. So yeah, double top maybe. NAS 22% in a few minutes. Sheesh, Joel, get it, bro. That is awesome, man. Very, very cool. Making me want to look at it now. But yeah, that's 9:27, guys. We'll keep it there. So if otherwise, unless there's any other questions, hope that, I mean, I know that some of that stuff was pretty basic for some of us, but probably pretty brand new for a lot as well. Just as little thing, guys, like be aware of, you know, the time of day, what's happening. Like, have we got any news coming? There's an, you know, putting a line ahead of time for either the New York Open or the London Open. Trendlines, a few little things like that to draw and be aware of. Early formations of patterns. I mean, like there, like I said, you've got the double bottom. You've got patterns within patterns. Obviously, like there's a push down, and then there's an M pushing back down, which then forms a double bottom for this W. And so now pushing up, and I believe still, since that was a higher low, I do believe we should break this. But if we don't right now, we'll see. But yeah, absolute pleasure, everyone. Thank you so much for your time this evening. Hopefully there was some gold in there for you. Kept it relatively basic, but yeah, guys, get into, I didn't go into paper trading and all that jazz. That's something you guys can definitely look into. But honestly, here's another thing. Drop questions in the group chat, but if it's something technical, go throw it into YouTube. Like I have learned a lot of little hacks just by going into YouTube and typing in TradingView videos and how to do this and how to do that. Some people make their living off YouTube making those kind of little hack videos. So dive into it. Spend an hour or two on that kind of a thing and make it, if you want to learn this and be proficient, then, you know, set aside the time to go and Google and learn those things. Otherwise, mindset, get into Change Your Paradigm, Change Your Life by Bob Proctor. I guarantee that will be phenomenal for you, and definitely Trading in the Zone if you haven't already. Besides that, guys, get onto Jay's channel, tune in with him. Still busy liaising with him. We were this morning chatting about a time for our time zone here in New Zealand for him to open up some extra sessions for us. So if that happens, guys, we need to dominate those sessions and bring in the views. So let me know if you guys are keen for some early mornings, because it'll be, oh, there you go, pushing up. Let me stop screen sharing right now. But yeah, looking at what we used to do, which would be perfect right now, post lunchtime New York is 5 a.m. So guys, 5 a.m. onwards, there should be moves. And I believe they are from what I've been seeing. I've been awake and doing something to my phone, but mostly babysitting my 2-year-old. So if Jay was running calls at 5 a.m., I would definitely be on those calls. So, all right, without further ado, without any more yakking and waffling, guys, have a phenomenal rest of your night. Trade safe. See where this goes on the charts. And yeah, we'll catch you guys all in the chat. Thanks, everyone. Enjoy, and we'll catch you soon. All right, good night.